What is going on, everyone? Today I'm going to be going over a trade recap on Microsoft, a trade that I took this past week. This was one of my favorite trades. It was a smooth trade, had the idea mapped out on Twitter the night before. So let's get right into it. I said on Microsoft 234 zone is key, right? It's a previous support, if you look here. If we see this 234 level right here, I marked it out, previous strong daily hourly support. Right here, you could see that. And when we broke through here, we went straight down, right? The first level that we went straight down to was 225. And then the next day after that, we went down to 221. So this is an area where price moves quick, right? You see it right here. When we reclaimed 226, we moved smoothly back above this 234 zone. So I'm watching this level. If this level doesn't hold and this demand turns into supply, I'm watching for targets of 225, which I said right here, 225.97 and 221.75, right? Trade idea is clear. If the demand level holds, it can move back up to 240, but I'm not really interested in that side because look at the RR, the risk to reward. If I have a breakdown of this area, we have a much greater area for the stock to move towards to. But if we move up, then this is the first big resistance when here we have a much larger area for the price to move to. So yeah, that's just the gist. So let's see what happened. So this is the trade that I took. I played weeklies. I used my regular consistent position sizing. It was a short week. I should have sized down, but if the trade is there and I like the setup a lot, I'm going to use the same position sizing. So that's that. I did enter a little early, but I used my instincts on this one a little bit, but I'll show you where that comes in. So this is the day, right? I took this on Thursday, January 19th, and that's right here. So I'm looking at the 5 minute. We open up and we break through this level. Remember where I said 234.19, key level, key zone? I have the zone mapped out right here. And I'm watching this. I'm patient off open. I'm watching the first two 5 minute candles to see if we get any confirmation. The first green candle on the 5 minute tells me nothing so far. I wait for the next candle and we see this type of structure on the candle where there's a long wick down and a very small body. So from my past, I have experience with this kind of structure. I tend to see a large red candle after this. This is kind of like a reversal to the downside. So I entered on that candle. You see right here, right? I took my full position on this candle, and this is something that really comes with experience. If I actually took this trade the best way possible, it would have been entering on this candle right here. But since I had a little bit of experience and instinct with these types of structures, I had a feeling that this type of candle would come right after. I took 13 contracts at $63 for a position size of $819. I took the 230 strike for puts because my my target was 225 and I like to play a little bit out of the money. So if we did get that move, which we did, but I did take profits early, and we'll get to that in a second. So we see I entered on this candle right here, and boom, right after we did get the reversal down. And since these were weekly contracts on a Thursday, they moved quick, they moved big. So I already exited out 25% of my position here at 85, and you could see my running P&L, and I also have annotated charts right here. You could see my P&L. I was down about $169, and then we moved pretty smoothly up back into the green. My stop loss for this was at $50 because if we look at the option contracts, the candle that I did enter at, the low of that candle on the contract prices was 49. So I set a stop at 50, not on the contracts, but mentally. If you watch my previous videos, that's how I usually do it. And my profit target was 99. I was expecting a move down to 230 or 225, I mean. So I did have a larger target in mind. And let's just take a look at the setup apart from what I did. I exited most of my position around here because of the fact that these were weekly contracts and I took them on a Thursday, so they were much more likely to move quicker. If I were to trade more smarter next time, I'm obviously thinking more about taking next week contracts after Wednesday, but I had high conviction in this type of trade and I had a tight stop, as you guys saw. So I was willing to take weekly contracts on this. I said my target for the downside were 225.97, which was right here, but we see that we have another zone right here that I had it drawn out because this is a zone that we move into and came down quick. So this was a pretty apparent zone that I had marked out and I was watching. When I have these larger targets to the downside or upside, I like to make note of any zones or support resistances that are notable on the way there. So on the way to 225.97, there was a notable zone at 230, at that 230 area. Hence why I took those 230 strikes, because that was as far as I thought the contracts would go. And if you look at the chart, that's exactly where we went, right? We went to that 230 zone and we bounced. That's why when I like to take these setups, I have to make note of any support resistances that might get in my way. That because I'm more of a scalper than holding for longer for that bigger picture trade. I'm not that patient, so I find a system that works more for me. And I already exited out most of here, but if I did stay, I would have gotten that greater move to 230. So that goes to show that I'm making note of these types of things. This is not really a mistake for me because these are the trades that I like to be in and out quick. But I did make note that I could have held this trade longer. Took profits too early. No, not really, but I'm making more note of these things because as my position size gets bigger, I want to leave more runners for that bigger picture idea that I have so I could squeeze out those winning trades for more profits. So, from what I've seen so far, if you watch my last video as well, I'll put the link at the top right corner of this video or in the description. I did make note of this similarly on that trade as well, that I took profits too early. And I was noting to myself that the trade did move out much farther after I took my initial final cut on the trade and it hit my larger picture target. So from here on out, as I increase my position size, I'm more looking to hold my runners, a small, like maybe say 25% of my position to those larger targets. So that's my main focus going forward from now on. So I could squeeze those winners out for more profits and for more that it could give me and block in majority of my profits with a stop at break even. So yeah, that was just a trade recap. I want to go over why I have these zones right here on the chart for a more technical overview. So right here, 119, this is where I took the trade. I'm going to mark it with a box. I'm going to mark it with a box so you guys could see. This is where I took the trade. I want you guys to understand how I came up with these zones and these levels. All right, so let's look back here. Hourly, we see a zone right here, a clear zone, right? We see a clear zone right here. Every time we come to this 234.19 level, we moved up quick. I like to look at areas where price moves quick, right? Price moves quick. And then when we broke this level, look how quick price moved down here. In 1 hourly candle, we got a 2.31% move all the way down to 225.97. And then this area was a notable resistance to the upside at 229.84. When we broke this 225.97 level, we came down to 221.75. And then when we came back up to this level, there was a notable resistance, right? You see it right here in pre-market, you see it right here intraday. And when we broke up here, we went straight to that 229.84 previous resistance. And this was a zone of supply and demand. Right here, we see it being supply at this level, and here we see it being supply as well. You see how we moved straight to that level. Oh, maybe we left some sellers there, and we came straight back down. That is a strong supply level. You see it right here. You see that long wick up on the hourly? That is a strong supply level. And then we eventually moved out of this level, and we went back above this supply demand level, and you see those long wicks down. That area became demand here. We went straight to that level as we did previously. You see that right here. Same zones from before working again. We came back down. look at those long wicks down. That area became demand. We moved right back up to that level. The same levels are in play. You can use these same levels again and again. And then the next day after that, we broke that level and came down. And then this is where I'm watching the next day. You see it right here. I watched for a retest of that zone. I'm watching for this demand. It was demand 1, 2, 3, the last 3 days. Well, it didn't get to touch here, but you get the point. And then we broke through, and I'm watching for this demand to flip into supply so I could take the move to the downside. And then we came into here. Look at that. Previous supply zone. Supply, supply. It became demand. You see that? That's a clear reversal pattern on the hourly with the little indecision candle, large red candle down, indecision, and then big move up. That's a reversal pattern on the hourly. And then look at the next day. This area became demand. So yeah, that's my trade recap on Microsoft. $372 profit, 45% return, 2.20 realized R. I had a planned R of 2.77. It's a 5-star rating, A plus setup, supply zone short. I hope you guys enjoyed, took away some value, learned something new, and I'll catch you guys next time.